What's up, weirdos? What's going on, guys? All right, so we got a special treat for you here. Sorry, the laundry room doors open across the hall, so if you can hear the dryer, I apologize. Anyway, um, all right, so we got a special video for you here. We're uploading this on our Crypto Blueprint channel because this is where we're going to do our special edition stuff. It is the new spaces that happened with Zebek today. Zebek Ecosystem Spaces Compliance Edition. You're not going to want to miss this, guys. So strap in, get your popcorn, strap on. Let's get ready to go. But first, we have to say this video is brought to you by Decent Biometric Wallet. Get yours today, guys, by using our link down below to get a great deal. Not your keys, not your coins. You can take profits on here on your Decent wallet. You can swap on here without ever having to go back to a centralized exchange, and you can even stake and gain APY on there as well. So again, use our link down below. Get a great deal, guys. Okay. Also, before we get into it here, if you need mentorship or coaching in this space, guys, if you're new to crypto, we have a mentorship program over on the Patreon. You can join our mentorship coaching calls where we can help you with everything from portfolio structure to exit strategies to when to take profits to when not to take profits to tokenomics, technical analysis, hot wallets, cold wallets, exchanges, how to do research, how to find projects, how to identify studs from duds. Get all the guidance and mentorship that you need in this space to succeed and get out of it with your profits intact. I just dropped a 100x microcap gem over on the Patreon as well. You're not going to want to miss that, guys. We're live there every single day. So jump aboard. The link is down below for that. We hope to see you there as part of our community of thousands of people, 8 different chats, buzzing 24/7. Check it out for yourselves, guys. All right, let's get right into it. Again, this is about 45 minutes, so I will leave you to it. I will be listening in the background. So I'll see you guys later.
Hello. Mic check. Hope everybody's doing well. Just waiting on a few people to join. Simon, want to do a mic check? All right. We heard you a little chopped off, so want to try it again?
Can you all hear me?
Now you're good. Yep. Now you're good.
Hey.
What up, Ben? How are you, sir?
Very well. Had a little bit of trouble getting on there. I'm just inviting Nick, our other guest, to speak.
Yeah.
We should get a request to come up and join us, and just hit yes on that request on your phone. I can see Nick.
Oh, you see it? All right, cool.
Yeah. So I'm just waiting for him to come up. Hey, Simon, how are you?
I'm doing very well. Can everyone hear me?
Yeah, okay, I can hear Simon perfectly. Nick, I just heard you.
Yep,
Put yourself on mute. You're working fine.
Thank you.
And then Wojtek, also come off mute and give us a hello.
Everyone.
There he is. Hey, man. How you doing, man?
Hey, very well. Yourself?
Perfect. Look at that. We got 4 speakers all up here. This is what we need. Whew. Right. JJ, how are you, man?
Pretty good. Very busy morning, but that's it's obviously good. How about you, man?
Yeah, excellent. Let's get this thing moving, I think.
Yeah, go ahead. I'll be on the background, and then just I'll let you take over.
Love it. Thanks so much. Welcome everybody. Another Zebek special spaces. Today we're talking compliance in Web3. I'm your host, Ben White. You'll have seen me around now. This is 4th, 5th, 6th spaces that I've hosted. We also started pushing some really exciting videos that we've been running. It's been a lot of fun. Joined today by Simon, COO at Zebek, Wojtek, and Nick, who I will introduce a little bit more formally in a little bit. Thanks everyone for joining. Really appreciate you. We're a couple of minutes in now, so a few more will join, I'm sure. And whilst we're waiting for that to happen, I guess it's really important. It's a funny one today. We were talking. We had a call prior to the spaces because we like to run through these things, make sure everyone knows what's what. And compliance. It's one of those kind of subjects, a grey subject, isn't it? Where it can often be kind of like overlooked and perhaps shrugged off a little bit. Feels like a bit of a boring or unnecessary thing to talk about. Actually, when you dig into it, and we're really fortunate to be joined by two real professionals and experts in the field. It's both exciting in terms of where it's taking the space in the future, and also totally misunderstood. And so I think it's really exciting to cover this today, whether you're a founder, an investor, a user, just curious about the future of digital finance and compliance in this space, then this is a conversation for you. Before we meet our guests, I want to bring Simon in from Zebec, who I think will spread a bit of light in terms of why this conversation really matters right now. So, hey, Simon, how you doing?
Thank you, Ben. Thanks for that great introduction. And hello to everyone on the spaces from the community. Excited to have everyone here. As Ben said, today we are talking compliance, an issue in crypto, or not an issue, but an area of crypto that does not get enough attention and is very important to a payments business like Zebec. So really excited to be diving deep into some compliance topics today to discuss what Zebec has been doing in the compliance space, what is on our compliance roadmap, and of course, bringing in two of our really star advisors here in the compliance space to get their thoughts as well.
Love that. Thank you. And before we get into it, I've got a couple of questions for you, actually, Simon. I don't know, obviously the space is wrapped with people talking about it at the moment. What were your views on the US Senate passing this Stablecoin Genius Act earlier in the week?
Well, I could say this is enormously positive news for the industry. It's a huge boost to any company that is operating with stablecoins like Zebec, of course, as we've built our payroll system on the USDC currency. Stablecoins are a 200 billion plus segment of the crypto industry, and they're growing incredibly fast. And that really shows the demand from the market for increased usage for stablecoins, as they are faster, quicker, cheaper than fiat alternatives. And it gives us, as a crypto operator, some sort of regulatory clarity that banks can now operate in the world of stablecoins and digital assets. And it's really helping build trust in the stablecoin ecosystem as well. So, for Zebec, as a company that I mentioned, has built a lot of our infrastructure on the Circle infrastructure network as well as USDC. It's a great step forward.
Yeah, I love that. I mean, there are rumors now off the back of that some of the major US banks are looking to issue their own stable coins. Question, and I appreciate, feel free to give me as much or as little information as you can. Would you guys be open to supporting bank issued stable coins?
I mean, it's all very early at this point. I think we've seen the news from Bank of America that they're considering issuing a stablecoin. JP Morgan, who we already work with closely, they're looking at issuing a stablecoin. I think we are going to adopt more of a wait and see approach, given our long-standing relationship with Circle. Of course, we're a member of the Circle Alliance program, so we are all in on USDC right now. And when Circle wins, so does Zebec.
Love that. Absolutely. And appreciate you. Sorry if that was dropped on you there, two questions, but obviously it's the talk of the town at the moment. So I just wanted to get your view on it. Let's bring in our guests. I think really important. We've got two voices, two advisors to Zebec, as you've said, who, I mean, they've both helped shape both traditional and digital finance to some extent. Wojtek Zatorski, who I met a couple of weeks ago as well, is the founder of GateKnox and now part of Zebec. He also created Blik, which is Poland's leading mobile payment system with over 15 million users. And Nick here is the co-founder of Strata Global, an FCA-regulated firm specializing in digital asset compliance. He's also a former independent director at Wells Fargo, the investment bank, and brings decades of experience from across TradFi and Web3. Two really, really interesting voices from the space who I think can really shed some light on where we're moving and what's happening. So I'm going to bring you both in, but I guess before I do that, hey, both of you, are you well? Are you good?
Yeah, very good. Welcome everyone, and thanks Ben for intro.
Love it. Thank you so much.
Likewise, thank you.
Go-
Thank you for having me here. It's an unusual place for me to be speaking, or for a compliance bod to be asked to speak, but I'm more than happy to.
I was saying earlier, I actually think from a Web3 perspective, it's really exciting to talk about compliance. It's something that perhaps not enough of the space is really facing up to and taking seriously. So to be able to get your take on that, I think is really interesting, but also to then combine that with the direction that Zebek is moving in is also essential. So I'm going to put this to both of you, Wojtek first, and then Nick come in afterwards. Why is compliance in Web3 so often misunderstood? And why do you think founders should really start to take it seriously?
Oh, it's misunderstood because it's a hustle, and everyone focuses on ease of use and everything, and it brings costs, brings hassle to both companies and the users. But what is not very well understood is that compliance is about the trust, and with the cryptocurrency and Web3 becoming more and more mainstream, attracting more users and attracting especially institutional investors and institutions, this is becoming quite important for Web3 founders to actually look at the compliance from a perspective of building trust in the community, building trust with the institutions, and minimizing the risk, because compliance at its core is actually about risk management and making sure that the situations like FTX and Luna, etc., won't happen in the future.
From
Love that. Yeah, Nick, sorry, I'll let you carry. I'll let you follow
yeah,
on.
no, I agree with that. But if I take the question back a little bit further and say, trust in compliance is a two-way thing. One of which is for the firm to ensure that everything is done in a compliant way, but trust is also on the firm's expectations on the regulator. Is it good regulation? Undoubtedly in the traditional finance space, and much more growing in the Web3 space, is having that clarity of decent regulation so we can get on and run our business, we can make some money without screwing people and causing a major collapse in any way like that. So good regulation and good compliance allows us to thrive. And you can see that in different jurisdictions where there's bad regulation or no regulation. Who wants to go there? But we'll come to that bit later on. But I think some other parts to your question there, it's the people. The people typically haven't come from the traditional space, which is where I came from. And by the way, I just chuck it out there. I was on the board of one very large crypto firm. I was a non-executive at a retail crypto firm. I did spend 2 years building a bank-backed stablecoin with some people. So I've been around the block a bit to see the differences between TradFi and the Web3. But when I come to the people, if you haven't come and grown up in the sector where the regulated sector where you have to behave and you're required to behave, and that used to run the basis of, we knew who the charlatans were and you wouldn't deal with them. And that's really self-regulation. Now we have better regulation on the top of it. Similarly, a number of the people, which is why I left one of those crypto firms, didn't get the point of compliance and thought it was a tick box approach. So no good governance. My mantra is, I'm not going to go to prison for anyone, so you're going to do it properly. So I also come down to that people part and say the compliance people haven't done a particularly good job for their boards of directors or their founders. And in my world, I'd say 70%, and I'd be quite interested to do a poll on that, about 70% of business prevention officers, about 20% are actually proactive and therefore drive compliance to make a better business, and 10% are just a complete waste of time. There we go, there's my view.
I love it. And I guess a really good opportunity then to carry on from your view, if you don't mind, Nick. Obviously, as you've just stated, you've worked at the highest levels in the TradFi space. How do you think those expectations carry over and into Web3?
Good question. On the basis of whatever happens, Web3 still has to be a participant in the broader financial services sector, wherever you may be located. And that's one of the problems of the original people, and I go back 10, 12 years in this, which is we decentralize, we don't have to abide by any rules, etc., etc. And then suddenly they wake up to the fact that, using the US as an example, the long reach of the SEC and the FINRA across the globe suddenly catches up with you. And look what happened to CZ from Binance with that long reach. Very difficult to play if you are on the bad boys list in your business. And of course, the fiat money has to go somewhere. You start getting cut off from all of those positions, game over. Worse, you go to prison before you've even started your business. But we can go down that route as well later.
Yeah, or not.
Or not. As I said, we're not going to prison, please, on this one. So.
Great answer. Yeah. Wojtek, I'm really interested. I mean, we've spoken about the fact now that Zebek has acquired GateKnox, and you've come into the Zebek network now to advise and work on this stuff. Talk to us then a little bit about GateKnox and the problem that it was built to solve, and how it differs from traditional compliance tooling at the same time.
Sure. First of all, Nick, I totally agree that the regulations need to be adjusted to the space that they address, and traditional finance regulations don't necessarily do it still quite well. Obviously, there is progress with this, and the best example how the traditional finance approach in compliance doesn't fit the new digital age, and especially the crypto space where the transactions happen quickly and you expect to be able to onboard almost instantaneously, is KYC and KYB processes, and especially KYB processes where you need to review the entire company. So those processes are still slow, expensive, and very often manual. The traditional process is very labor intensive. It relies on compliance officers manually reviewing papers, and this isn't something that is fit for the 21st century. So what we've been doing in GateKnox is we actually built GateKnox to provide services for Web3 industry, where the expectation is that this process is going to happen rapidly. So obviously, we've been trying to make this process as easy and quick as possible for both sides of the equation. The companies that are onboarding, and also the service providers. So on one side, from a perspective of the companies that onboard, the biggest problem is that you provide the same documents over and over again, and you ask the same questions, and it takes extremely long time. And a lot of this information that you're being asked is actually publicly available, and you can obtain it. And instead of asking these questions, just ask for confirmation. So this is what we've been doing on the client side, and on the compliance officer side, we've been utilizing AI processes to go through documents and analyze the risk, to provide feedback to the compliance officer as quickly as possible.
Can I add to that?
Yeah, please do.
And as Wojtek says, if we think about one of my earlier comments of the the business prevention officer, the area of compliance that we're talking about here on the onboarding is a cost center. It's not a profit center. How can we turn it into a profit center to make sure it becomes a lot more efficient? And that's something that I try to do when I talk to firms about this. And just to give you an example of that, 20 years ago, it would take however long, a couple of weeks to onboard somebody manually. And I recall when the CFD and rolling spot firms started up, it cost about $800 to onboard a client. That did include the marketing spend. Now, that's now come down rapidly.
Oh, Nick, I think we lost you there. You're back on mute.
It just pinged out. I think coming back to what Vorchek was saying, that the cost is reduced massively because of the efficiencies of the technology. But the technology in the traditional firms is blinking ancient, and they can't adapt it very quickly. And that technology, I can always put in human technology, they are processors, they're tick boxes. This is the way we've always done it. We're not going to do it again. And that's the problem of changing this, which is why I just love the Web3 world, where there's much more efficiency, understanding that we can throw away that technology and bring in new. So I give you an example of that. Any crypto firm at the moment trying to open a bank account, why does it take 10 months just to get into the queue and then somebody to start looking for it? And then they ask for a Wolfsburg form. I don't know if any of the listeners here have seen a Wolfsburg form. It's 100 questions, which is applicable to a correspondent bank or a bank-to-bank relationship. So why are you sending that out to a crypto firm? It's of no relevance at all. That's because we have to tick a box and say we've done it. And that comes back to the point, as Vorchek said, of being able to understand what we're getting in the KYC area of the Wolfsburg form says, yes, I've got all of these policies and procedures and governance in place. Tick a box, we can move on. But what Vorchek's and GateKnox is doing, it's got the OKRs in there. It's showing the effectiveness of what you've actually done, and it's allowing the thinking to go on rather than the box ticking. So, yeah, well done, Vorchek.
Yeah, and not only that, if you think about this going forward, in blockchain space, you already have a concept of zero knowledge proofs and selective disclosures. So the approach that I believe is going to be taking more and more interest is actually storing all this information in a secure encrypted way on the blockchain and allowing you to share as much information or as little information as is really needed. But for that, we need some changes in regulations as well, because if you think about this, and I don't know if you agree with this, Nick, but a lot of those questions are totally unnecessary. And for me to prove that I'm over 18, I don't really need to give you the full picture of ID. It's enough that you trust that my identity has been verified and that I am in fact over 18. You don't even need my birth date for that.
I quite agree with you, but a firm, then we come up against the regulator and the regulator, wherever they may be, who generally has a process to follow, and they will expect to see certain things, even though they are pointless or irrelevant. And maybe if I throw that out and say, have a look at the FCA enforcements here in the UK and see how many times they have enforced against a firm for actual financial crime compared to enforcing for them in process failure. So that's half the problem in the traditional finance world, is we've got to demonstrate the process first, not that our clients are criminal. Different problem.
Fascinating stuff. Really, really interesting. And thanks so much for both of your insights on it. Simon, I want to bring the conversation back over to you then. Obviously, we're starting to get a picture now of what GateKnox was created for and what it kind of provides. What do you think it unlocks now for the Zebec ecosystem?
Well, the Gateinox acquisition is a big win for the Zebec ecosystem. Of course, at Zebec, we are disrupting the global payroll system, which has largely remained unchanged for the past 50 years. With stablecoin regulation now paving the way for the industry to finally see an acceleration in the adoption of crypto payroll, compliance is becoming front and center. And that's really where Gateinox fits in. So compliance, it has to be embedded within the infrastructure of the payment network for this to really work on a global scale. And many payment networks that rely on outsourced providers for compliance will be at a disadvantage to those who embed compliance tech into their stack. And that is exactly what we're doing now as we integrate the Gateinox acquisition into the Zebec tech stack. For us, integrating Gateinox has allowed us to embed KYC and KYB for all Zebec users and partners directly into our flow. So that means that we have complete ownership over the customer onboarding flow. We have complete ownership over the data, which also ensures security of that data. We lower our costs by bringing in compliance in-house rather than paying outsourced providers. And then as we look down the road, this also gives us the potential to white label our own compliance solution to other crypto platforms, as we view this will be a growth area in the market.
And
Massive.
hopefully, Simon, also speed up the checks, because these are very often the major cause of users dropping off the onboarding, right?
It's a point of friction, whether you're signing up for a card or you're doing a full KYB to use payroll. The quicker it is, the higher the conversion rate.
Exactly.
100%. I had to sign up for an account a little bit earlier because I needed to test something with a client that I have, and I gave up. I was KYCing and I gave up. So I'm going to go back to that another time.
Not only you. That happens very often.
And that's one, and also for the record, that's one of the biggest central exchanges in the world, and it was just such a headache. So yeah, this is all really, really fascinating stuff. Simon, I got one more for you then before I turn it back to the guys. I know that you and I were speaking earlier in the week, and that Zebec is actively pursuing SOC 2 compliance. Maybe you can just extrapolate what I mean. I'm British. It's also lovely to have Nick on, by the way, talking about how something's blinking ancient. It's great to have another Brit on with me. But yeah, it's I guess talk us through SOC 2 and what that means and why it matters, and maybe some of the other things that you're looking at along those lines.
Absolutely. So yes, as you said, Zebec is currently pursuing SOC 2 compliance. We are in process with that. And this really comes down to data protection and data security, which I alluded to earlier with the Gateinox acquisition. It's incredibly important in the US, and it's a requirement for many partners and enterprise clients to have this certification. And what it does is it sets up Zebec network to work with much larger institutions, including governments, universities, and financial institutions. So it expands our reach, expands the number of clients and type of clients that we can serve. And it's also part of our broader ISO roadmap, being kind of one of the earlier steps in getting to ISO certification.
Thank you. Wojtek, Nick, in that order, how important is SOC 2 then when it comes to scaling enterprise grade systems and clients and all of those things?
I think Simon already said it's incredibly important, especially that many of those enterprise clients, especially in US, are not gonna sign or not gonna go through the process until you do have SOC 2 certification. So this is sort of prerequisites in many cases. They don't even want to speak to you if you don't have it. And in the cases where it's not such a strict requirement, that sort of proves that you do care about internal processes, your internal policies, that you have your house in order, and that the risk is minimized. So that's sort of coming back again to build trust that the organization is serious about running business in a proper way.
Yeah, as you say, it's a binary choice. You either do it or you don't, and that's the same as the first part of this conversation when we're talking about compliance, starting it at the beginning. You're building the proper foundations for governance through the entirety of your business. And without those foundations, or build it on sand, and you're going to have a problem at a later date. The big issue, of course, for any startup is the cost. And startups are flying as quickly as they can to get money in, revenue in, appease their VCs on certain projections. But without those foundations, which don't have to be gold-plated at the very beginning, you build from them, and you have that ethic within your firm, great. And ultimately, it comes down to that risk-reward scenario. The risks include obviously regulatory sanctions for not having or having a data breach or a compliance breach for that matter, versus the rewards of actually growing your business much more easily as the CEO, because the structure is already there. You can build on it. The technology is built to be compliant, hasn't been forgotten about, and it brings everybody on board. And then I come back to Vorchek's point. You're then acceptable to the TradFi space, which may well hold the keys to you getting your fiat out somewhere along the line.
Yeah, of course.
But
Easy. Oh, go. Sorry, go.
Another thing about any sort of framework like ISO 27001 or SOC 2 is that it really brings your house in order, because you need to go through those processes and organize them in a proper way. So very often you may discover that the things that you believed were in order can be actually greatly improved. So I think it also brings the benefit for the company itself, not only from a perspective of appearing to the market and to enterprise clients, but also internally.
Yeah, absolutely. Sorry, Nick.
I think it's quite interesting as well that it calls SOC 2 calls for an independent auditor to have a look at what you're doing. And I compare that then to the UK and Europe, where you don't need an independent auditor to qualify yourself as suitably robust. I wonder what will be coming towards Europe and the UK in the future, whether that external audit will be required. I wouldn't be surprised.
Absolutely agree. Yeah, you can see it. But given where we've come from and where we're intending to move, you think that kind of compliance is just going to be necessary, isn't it, to wash through some of the nonsense?
And dare I say it, it's probably a demand of a regulator. We know that regulators in a number of jurisdictions are very, very fearful of Web3, crypto, loss of control over our financial services sector by this. I could imagine that's probably one of the things that the Europeans are going to leap on and say, yeah, we like that bit. Everyone needs to be audited for SOC 3 or ISO or GDPR and all of that sort of stuff. Interesting.
Yeah, really interesting. Okay, guys, look, we've spent a lot of time talking about what's happening right now. And having spoken to you both now previously, I'm really interested and excited by the next question, because it means we get to look forward a little bit and we get to look into the future via your knowledge and experience. So I'm going to put it to Wojtek first, and then come back to you, Nick, in a moment. I'm really curious, what, in your opinion, does the future, and I'll let you define the future. You can either be next few years, or you can really go out there and be fully dystopian. But what does the future of compliance look like in Web3 and finance more broadly? Is it real time? Is it invisible? Like, what are the big changes and adaptations that we're going to see in that sector?
Yeah, I think I've already said that the current processes are broken and they're not adequate for the digital economy, and they need to evolve, they need to change, and this change needs to happen very quickly, because if you think even about KYC process and going through taking picture and having this verified. With the rise of AI, now you can very easily really go around those processes. So, right now it looks like the technology is being used or can be used much quicker for performing criminal activities than what's happening with its use to really verify the individuals. But not only that, as you said, the compliance needs to become embedded into the backbone of the Web3 industry to grow and to become publicly accepted, fully publicly accepted. And in order for that, you do need to have user experience that it's acceptable, and it's not currently. The cost obviously needs to go down, and we do have technology that is capable of helping with those processes, but we also do have regulations that don't allow this technology to be used at the current stage to its full advantage. So, going much farther, I I really don't see how the current stage can progress much farther. It does need to be embedded into the whole system in sort of similar way as we have it embedded in the payment systems. We all forgotten about the fact that you had to write checks. Now you just click your phone and you pay for things. And this is the experience that you do want to have with the compliance. You don't want to remember about this. You don't want to spend too much time on it. You just want this to happen. So I am big believer in zero knowledge proofs or similar technology that will allow you to have your um, have your identity and all information stored in a secure way, in a way that you control, and only provide information that you deem really required.
From my point of view, where do I see it? I'm actually quite excited about the future, but let me just put a little bit into context there. When we use the term compliance functions which consume far too many people in major industries. They're either reactive, proactive, and there's process-driven. And we can't forget the process-driven, which you, Wojciech, just spoke about as well. We can actually use the words, the transaction monitoring, which get tied into the KYC and AML. And KYC AML goes into that process part, if you like. And that's the bit that we're really focusing on here today. So I won't bother with the other parts of the compliance function. But where do I see it going? I see, I'm not sure if I should say it this way, I see a major reduction in people, which is a good thing. And that means greater efficiency and greater data being put in front of the board of directors or the people who are taking the risks for those businesses, rather than the rubbish that comes up to senior management at the current time. But if we have a look at that, it's going to remove the pain points that you just spoken about, Wojciech. The ability to embed that into the transaction monitoring, so you can see a whole holistic view of what is going on with your client. And I include in that the business, corporate clients as well. And that's the information that you really want. And what is the point? Why are we actually doing KYC AML checks? And essentially it's just to keep the bad money out of the system. So that's what we're really looking for in these particular things. So I also think that a lot of what the future will look like will depend upon the regulator attitude, which is way behind the thinking that probably everybody on this call has, that we want to go faster, we want to go quicker, and this makes sense. And there's another little bit in there. I see the ownership of my ID and my ability to use that transport to go and use a different financial service provider because I prefer their product, but I'm not actually a client of theirs, should be seamless. We tried that a long time ago when I worked for a major investment bank, not the one you announced, by the way, at the beginning. And they wanted to set up a centralized KYC piece. But all the other banks wouldn't touch it because they were going to nick your clients. This is why the Web3 is so much more efficient in that, is because I shouldn't be able to nick somebody else's clients just because their KYC is on this particular piece. So I can see there will be a reluctance to some firms. I might lose a customer, but then again, you could gain a few more. It's going to make your products a little bit better. But I think the actual answer I was supposed to give you was I see these systems being greatly improved. We were talking the other day about putting AI agents in to be able to break down those barriers between all of these process pieces. And I reckon that within 5 years, this will be seamless, and that GateKnox will be seamless in the way it produces this, and hopefully delivers some transaction reporting as well for you at Zebek. That would be really good. And that just takes an awful lot of effort off the senior management, who can then rely on proper management information coming up to them. Risks reduced. That's what you want to do, assuming it's within our risk appetite and all of that sort of stuff. But we can get on and make a bit of money. There we go.
There you are.
And
That's what we're all here for. Go Wojtek, sorry.
Yep.
5 years, Nick, is extremely long time. Looking at how the technology is developing, how quickly it's developing nowadays. Wouldn't you say? I think that change is much more rapid. It's just, as you said, regulators and traditional finance that is not yet ready for all of this. But
Absolutely.
this wave is coming, and as you said, I do believe a lot of compliance officers are going to lose their jobs because AI is much more efficient in analyzing the data. And if you look at it, probably, I don't know, you might know it better, but I would say over 90-something% of people doing any financial transactions in Web3 are legitimate users. And yet, for the small percentage of, illegible users, you go through this such hassle.
Yeah, absolutely. Well, look, guys, this has been a great conversation. I knew it. I knew when we were talking at the beginning that compliance is capable of being insightful, and so I'm really, really grateful for all of your time. Simon, to you too. I've got a final question for you all, and it's actually asking you for a final thought. What's the one thing that you think every founder, investor, or builder should remember and take away when it comes to compliance in Web3? Wojtek, I'll let you go first.
Yeah, I think we already sort of talked about this, but I'll reiterate it. Compliance, it's not your enemy. Think about compliance as trust, and to build sustainable business, you need to build trust. It scales in the long run much better than hype. I'll leave you with this.
I love that. Build trust completely. Nick, how about you?
Well, I think if you really want to build a proper business that's going to have longevity and be able to make decent money out of it, then act like a real institution and implement the foundations from the beginning. That doesn't mean you have to over engineer them, but think about them in all of your strategy as to where you're going forward. Compliance plays a big part in that. And brackets, that's the proactive piece that I mentioned earlier, to be able to advise the board on how it could be built to protect us all.
Yeah, I love that. And Simon, obviously you're going through this at the moment, right? You're not just at the forefront of working with these guys to build compliance, but you're actually having to be compliant. And so I'm curious, like, what's your takeaway?
Well, I think we can all agree that compliance is no longer an option in the Web3 space. The Web3 space is no longer the Wild West that it may have been in its early years. You're seeing governments now putting out bills, you're seeing financial institutions come into the mix. And for that reason, we need to operate more like TradFi with full compliance systems, compliance teams, and not really just view this as a cost. It has to be a core part of all the infrastructure that we build.
Hopefully,
Absolutely.
Simon, we're gonna add to this, still Web3 approach from a perspective of building it in a way that it's cost effective and quick and don't follow traditional finance where they went wrong.
Exactly. Right. We can learn a lot from the big banks and how their compliance system runs and build it a much quicker and more efficient way in Web3.
I love that. When I met Wojtek a few weeks ago, it was UX, 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 right? That's what we do. We build a streamlined process that nobody can fail to understand and complete. And by doing so, when you create a product that good, then you've knocked down all of those barriers. Absolutely love it.
And people are gonna come.
Yes, when you build it, that typically happens. Yeah, it's it's well said. Okay, look, huge thanks to Simon and the team from Zebek for hosting this and allowing me to co-host and moderate conversation. Wojtek, Nick, absolutely fantastic to meet with you again and to get a bit more insight in your expertise. Really, really appreciate that, particularly around subjects like this that just don't get enough attention, and they are absolutely essential.
Thank you for having me.
Amen.
Great pleasure.
Thank you. Okay, everyone. Compliance, not the enemy of Web3. Done right, it's what unlocks potential. Discuss. I hope you want to come back and drop us come into the Telegram group, come into our DMs, leave comments, etc. Would love to know what you think of this conversation. It's been a really, really interesting one today. Obviously, give Zebek and everyone here a follow for more updates. And we look forward to seeing you on our next episode. I think we've got another one going live next week. In fact, we're going live
Ben,
on a
I think
weekly cadence now.
I'm not sure, Simon, do you hear Ben anymore or not?
Oh, no.
Ben is on, yes.
Yeah.
All right, guys. Well, we'll close it out. Everybody, thank you so much for showing up, and we'll catch you guys on the...
Well, there it is, guys. There you go. Just, they keep dropping this bullish stuff on a weekly basis at this point. I could not be more excited about the project, the long-term perspectives of it. Buying Zebek now feels like buying XRP back in 2017. Prove me wrong. Click like if you like this video. Click subscribe if you really liked it. I'll see you guys in the next one. God bless.